Hello everyone. Welcome to AccuWeather Learning Hub. I hope you did like our previous video, and if you did, you do like it, do like this video. As in the previous video, we did study about what and how to analyze and interpret the stock market data and how to choose the right stock to be bought. And in this video, similarly, we'll know what is stock price index, how to analyze them, what do they exactly mean. So keep following for more such updates. Do subscribe to our channel, the AccuWeather Learning Hub. So let's begin. So what is stock price index? A stock price index is representation of combined price performance of a large number of stocks, company stocks in a particular market. So there are various stock price indexes commonly used today, and some of them are quite important. One of these is Dow Jones Industrial Average, NASDQ, etc. You might have heard their names and you might have wondered what are they. So they are nothing but analysis of what have been the changes in price of various companies in the stock market. So these indexes, some of them are based on what companies they analyze, that is what they are based on it. So some analyze companies of a particular sector, like a particular index might analyze only companies of textile sector. The other one will analyze companies from the steel and iron sector. Some won't analyze these companies, some will analyze the movie industry companies or different things. Some will analyze a particular capital group of industries, that okay, we analyze companies whose capital or turnover is based between this price to this price, and this is what we analyze, this is what we are an index about. So now, based on what stock you are going to buy, you need to choose the right index and decide how to analyze it. So let me define once again. A stock index is a group of shares that is used to give indication of a sector, exchange or economy. Usually a stock index is made up of a set number of top shares from a given exchange. Exchange means, what exchanges do we have in India? Yes, one is NSE and one is BSE. Bombay Exchange and Bombay Stock Exchange and the National Stock Exchange. So let me give you examples of a few stock indexes. One is ASX 200, other one is FTSE 200, then Dow Jones Industrial Average, as I said, then DAX and various other things. And one of the most important ones can be NASDQ. It is one of the most important index of the US market, and it's quite important for the world since US market is the growing market. Though we have various developing market like China and India, but US market has its own importance. So it is the most popular market, most gaining market. You easily gain from such markets. So these indexes can be divided on the basis of what they cover. As I said, some cover a particular sectors, others cover a particular country. So let me define them one by one for you. So one is the country coverage index. It represents the performance of the stock market of a given nation by proxy reflects the investor sentiment of the state of the economy. Why do we see that there is a fall in stock market prices when somebody loses election or the government falls down in a country? Or why did when Modi win there was a sudden rise in the stock market price? This is what the investors are thrilled, they are happy, they are more relying on the government. So they know it's going to be saved their money, their capital. So they buy more and more stocks on such day. So such country-based stock exchanges or stock indexes help us analyze what are the mood of the investors in a particular country. Next is the regional coverage. So such indexes represent performance of the stock market in a particular geographical region. Some of these can be FTSE Developed Europe Index, FTSE Developed Asia Pacific Index. So as its name says, FTSE Developed Asia Pacific Index analyzes the Asia Pacific area, and FTSE Developed Europe Index analyzes the European market. So this is what to be done. They analyze European market, the mood of European investors, how they are investing in various stocks, how they are doing this, analyze everything. Next ones are the most important ones, and they are the global coverage index. As the name suggests, they cover the entire globe, but here geographically. So such indexes represent the performance of the globe stock market. Most important one is FTSE Globe Index series. So you know what, this is the largest stock index as far as we have right now, and it analyzes over 16,000 companies. So these companies are based over nations, over countries, over continents. So over the continents, over the countries, these companies are analyzed, and then an index is formed analyzing the mood of the investors all over the world about what are they preferring to buy today or in a particular month or in a particular year. So next, and another important one is exchange based coverage. So such indexes may be based on exchange, such as the NASDAQ 100, or the group of exchanges such as Euronext 100, OMX Nordic 40. So they particularly cover company of a particular exchange. Like supposedly, if we have someday a particular index analyzing companies which are registered under Bombay Stock Exchange, then it will be, suppose we name it Bombay Stock Exchange Index. So then it will be analyzing that particular companies which are registered under a particular exchange. So these are exchange based coverage index which analyze companies registered under a particular exchange board. Next is our sector based coverage index, which I have already told you that these indexes track performance of companies in a particular sector. Some examples I'll say, it is the Real Estate Investment Trust, NASDAQ Biotechnology Trust. It consists of over 200 firms from biotechnology sector. So it is another important index, and these indexes give us an entire idea of how the biotechnology industry is rising, or how the textile industry is rising. What is the mood of the investors, of the big sharks? Are they planning to buy more in the textile industry, or are they planning to sell more? Are they selling out? Are they letting their shares go so that they are expecting a lowering of prices of the stocks of such industries? Are they expecting a price rise? So they are heavily buying such stocks. This mostly happens near when budget is about to be decided, and it has to be taken out. So people, they make assumptions that these industries will be rising, will be gaining from the coming budget, or will be losing. So they go on buying various in particular kind of stocks. Then suddenly we see a price rise, a huge gain in price, and then supposedly the budget didn't favor the industry. Then we see entire fall in price. Or sometimes if it does favor the industry, then the price rise continues, or it is lowered a bit, but yeah, it continues, it carries on. So I hope you did like this video and you are now clear about the stock indexes. What are they, how are they used, and how can they help you analyze the stock market. So stay connected. In the next video we are going to study about various kind of stocks, and based on your capital, funds, your expectations, which stocks should you buy, and what are preferred stocks, what gains you make from different kinds of stocks. Do like this video, do share it with your finance friends, do share it with your economics friends. Stay connected. Thank you.